Hello, everybody, and welcome to the Plus3 Futures and Commodities show. We are recording here on August 30th, the monthlies print today, August 30th, a couple hours before the close and before the holiday, Labor Day holiday weekend. On today's show, we're going to talk about the sideways because that's all we're getting, but the sideways is going to end. So it's the calm before the storm.
Hmm.
And we're building up energy and things are boring and it's easy to get distracted, but this is the time when you got to focus and be ready. So that's the focus of today's show. My name's Ben Maldonado. As always, I'm here with my partner Barry Hederachi. Barry, how we doing? End of another month.
Man, end of a month and end of a kind of restful week because not much to work on.
Uh,
Everything was kind of quiet, like you said.
yeah. But I do think it's the calm before the storm because we're in a period of heightened volatility cycle wise. This week I think has been the anomaly where it's there's been mean reversion with a vengeance, and I think we
Mhm.
just got to be ready because as we've seen, when these triangles or these congestions break, the move out of them are pretty spectacular.
Yeah, I think we're set for next week. We're just so very close,
Yep.
and this is pretty much done. We're on its course, I think, sideways. So this is
Let's run. Let's start and jump right in with the E-mini. As always, if you like our work, please support the channel. Send the links to your friends. Sign up on the channel. Subscribe. Ring the bell for alerts. You guys have done a great job helping us grow the channel this year, and we'd like to keep that going. And we do
yep. Do the
appreciate it.
things. Do the things.
Yeah, we appreciate it.
So getting back, well, starting with the
Getting back to the sideways.
yeah, getting back to, well, last 2 weeks, I mean, we've talked about this 55, 66. I don't know, probably the last 3 weeks, because that was the point we had to take out and we got there. So then we've been trapped between 55, 66 and 56, 82. And that's the bracket we've been watching ever since the high came in. And last week, I just said, look, we don't have much of a choice. We have to deal with these numbers because that's where we are. And we talked about, as long as we're above 55, 66, the market's going to hold up. It's okay. And it's probably going to just continue to go sideways unless we get on top of 56.82. So it pretty much went sideways, tapped 55, 66 a couple times, came down to that area. Of course, near the close today, we're smack in the middle of that range, right? No,
And and listen, Barry, you don't toot your horn, and I don't toot my horn too much, but look how perfect your brackets are, man. That's just really, really good.
yeah, that worked out. And, well, I'll show you another bracket, with the little show we did on NVIDIA on Wednesday. That bracket was like perfect.
That was
So,
golden too. Yeah, it was very, very good.
so bracket, it's easier to do brackets when you're using squares. So if you guys are, interested, check out, how to use Gann squares, and it's just a really good way to go. Anyway, getting back to the E-mini, what can I add to what was not said last week? Not a hell of a lot, other than we did that 90 cycle going up into
Yep.
going up into the highs, the lower highs, and the lower high seems to be holding. I mean, look, just from my experience, once one of these highs come in, a big cycle comes in, if we really can't take it out and run right away, I mean, there is a time you can say, well, holding up below, it's kind of bullish because the pullback is not that deep. But we did have a deeper pullback, as soon as the cycle expired, and
Hmm.
then we ran back up, and we just sort of spending time, which makes sense because the vertical was so steep. It makes sense that we put in some time to catch up. Let time catch up with the price,
Hmm.
and it feels like, without getting totally technical, that we're about to run out of that either today or early mid next week. Well, we have a holiday on Monday, so let's say figure Tuesday, Wednesday, right in that
Hmm.
time period. We talked about a few cycles that expired this week, and we were thinking, well, after that, we should get some kind of a shakeout. And we kind of did midweek. We had some cycles, and we had a couple of steeper down days this week, but it didn't really break out the bracket that we've been trapped in. So let's look at the regular charts that we look at. If I show you guys a 30-minute right away, you'll see, well, I'm sure you've seen what happened, which was not a whole lot.
A whole lot of sideways.
A whole lot sideways, exactly what happened. So I just wanted to show you this. Well, let me go back to the ES really quick. Something interesting, you might not be able to see this. This is a square of 90. And let me just change something here.
Barry, there's something in me says there's going to be some kind of announcement that they use to go up and false break this thing and then rip it lower.
Yeah, I mean, there's something in the air. That's for sure.
Mm-hmm.
There's no question. So I just wanted to show you when I run the square of 90, it's easy. I mean, if you're not used to looking through squares, it's hard to see the thirds.
Mm-hmm.
So here I'm using a square of 60 just to kind of show you what's happening. And so one of the things we talked about earlier was how we did this 90 by 60 into the high,
Mm-hmm.
right? So that was the last leg, which was a 60-day run into 90 in price, which is kind of a big deal. And that's what we called it, along with the big 90-week cycle that came in. So what happened, what's cool here is, we did 60 up, and then we did, 6 to 30 high to high coming up to here.
Mm-hmm.
And which also means, we did 90 from the low to, low to the lower high, high to high. So
Right.
all around we have counts coming into this period. Normally when they come in, within a bar or two or three, things start to show up. So the fact that we didn't really budge from this area, of course, we didn't move higher either, right? We had the 90 right there. We really didn't break out and move higher.
Mm-hmm.
And we really quite didn't break down either, because we had this 55.66 here, didn't quite break down. So we trapped. But what I wanted to show you was there were time counts that came in right into last week, which we talked about, and it would had some kind of an effect going into this week. And these are easy to see on the 60. So I mean, see what I mean? Like here, it's harder to picture all of that, but it's all in place. Just wanted to point that out. And there's a reason for that. We'll get into that in a little bit later. So looking at the cash chart, there's the SPX. Now I'm almost sorry I drew this target line in here, 55.82, which was sort of the 7/8 level of the square, 7/8 of the square of 90.
Mm-hmm.
And oh boy, it almost as if the market saw that. It hasn't budged. I mean, it's just basically perched on top of that. You know what I mean? A couple like how pigeons perch on wires, just on top of that.
Yep.
Perfectly. So when it's, when a market's like this, there isn't a whole lot to do other than to do whatever you can sort of scrape up out of the 30-minute. There's not much to do here. But I'll tell you what, though, there's a lot happening in the larger time frame. So I'm going to go and look at the weekly chart, show you guys a couple of things.
Yeah. Weeklies.
Right?
There's
Because
some serious stuff going there.
Because anytime market stalls out for long periods like this, not anywhere, but at critical places, it's just buying time for some event.
Either distribution or accumulation.
Exactly. And in Gann terms, it's just buying time. Time is not quite there. Obviously, the price is the correct price, but the time is not quite there. So we just sit there.
And I think, Barry, I want to explain one thing too for new listeners and old listeners as well. The reason we are so focused right now is if we get a lower high here, it's setting up what we constantly look for, whether it's commodities, whether it's individual stocks, whether it's the indices. That third leg is the fast move. And we're like on pins and needles, even though the market is sideways, because if we can identify this third leg here, it's going to be the big mover. And in this case, it would be the third leg down.
And it'll be a doozy.
And it's listen, that's basically the focus of our work is we try and find a corner and then get that first major pullback after the first leg. And when that tops or bottoms, the next leg is the money leg.
Mm-hmm.
And that's why this is so important. I just wanted to reemphasize that because you and I take it for granted, but I don't think everybody understands that. So we want to make sure they know why that's so important.
Yeah, that's exactly the reason. We want to catch the fat pitch, like you always say.
That's right. That's
and
right.
here, here's a perfect square. Following that, well, it's not just this square, also on the weekly, and I'll show you a couple of other things on the weekly. All of when they all stack up, it's and this is not all the time, but when some key cycles line up, you really want to watch this and not just pretend it's just another Tuesday. There's something bigger happening, right?
Oh, that's right.
So we'll get to that in a minute. Let's look at the Dow chart, see what's happening. And so on the Dow, 41,348 was the key level that we had coming off the low from October of 22nd. Well, we didn't quite take out the high that we made in July, which is interesting. And we might end up with a inside day today, last day of the trading. If we do that, this inside bar should be really watched. Why? Because the entire bar crisscrossed our key number here, 41,348 today. So we're just pretty much right there, 41 at 348. We're at 410, let's say. So it's very, very close, and we ought to watch that. Now, this could be an extended move off of the 180. There are some other cycles that are in play, and we'll talk about those late. Well, the other markets are kind of running the show because they're, those indices have a lot more stocks involved, especially, the Nasdaq, S&P. And if you take it from the low in 23, you can see we're just hanging around right at the 135 line off that low. And so let us not forget that. So we're watching all of this. And the key thing with the Dow right now is the fact, how we close above or below this level in the coming days. So right now it's right there. So it's a little too early to call. What else do we have? Well, this is worthy of talking about now.
Yeah, look at that.
We took a peek at the last couple of weeks, I think, and it was kind of done. It's really kind of a fun more than as a trading system or a method. But boy, these geometries, when they work, you and I, we both know they are amazing, just mind-boggling. So what's mind-boggling here is how well the curve fit and how well it's holding this counter trend. I put this into place once its high came in, we were dropping, was trying to figure out, where like the really strong support might be geometrically, and it ended up becoming around 49, let's say 20, 23, 49, 23. And but in the process, these circles had to be drawn, and it's pretty amazing how we're holding right under that. So just it's something to watch. Here's another, not so much the circle, although this circle will allow for some kind of
a false break.
Yeah, false break to the upside, which it could happen going into next week.
That's a nice Gartley.
But that's what I wanted to show you. This Gartley is pretty good. I drew this in once the C came in and we were starting to take these out. What's amazing is how well it stopped right at the furthest out equilibrium line.
Yeah.
And shot back up and, stopped at the equilibrium line on the other side, the inside line versus the outside. We have two outside lines and two inside lines, and it went from the outside to inside. So geometrically, this thing is humming, even though the days are boring and, all this blah, 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 right? But it's looking pretty perfect. So I'm just, nothing to trade here necessarily, but it's to see, are there is there anything in geometry that can sort of buttress or support what we're seeing on the technical charts? And so far, this is looking fairly good. So we'll continue to watch it, see what happens.
Well, and the answer also that I get from this is that the geometry is significant, so the moment and the spot is significant.
Yes, exactly. That's exactly right. Yeah. Otherwise, how could it all hold together, right?
Right.
So there's some kind of a perfection in there. All right, getting back. So we talked about the cycles that are present, all of that. Okay, let's jump to the weekly chart really quick. So 25th, 26th. So this is what happened this week. We pretty much called out
That's
all
that's
this.
your 30-minute, right? Not your
Yeah, this
weekly.
is yeah, this is the 30 minute,
30. Yeah, 30.
30
Okay.
minute ES. And this is the chart we post on X.
Hmm.
And the big joke's been how this 56.29 has been sort of the mean reversion point for 10 days, which I don't think I've ever seen that.
A long time.
Yeah, it's a hell of a long time. And what's funny is during the day we've been able to catch the extremes and and the reversion points. Well, even today,
Using the fuse lines, right?
yeah, using the fuse lines and other support levels that we have. So morning, the fuse line caught the high. We dropped down dropped down into the low of the day, and that caught some other support. And now we're moving, well, trend line support for one. Now we're back to 56.29. Can you imagine if we were just writing options off of this level somehow?
Right, right.
So if you're trading this, not much to go on other than just watching the movement. But what's happening towards the end of the week, like we talked about early part of the week, we're starting to really narrow. You can see how not only just the sideways is bad enough. Now we're starting to really get into a very tight triangle. And if we're thinking about the downside, and the ideal would be to go up and sort of, do a false break and then roll back down. We'll see if that happens. Of course, the other side of the coin is always, if you go on up and tap these, come back and hold above 56.29, then we have to wait to see what happens. We're definitely using this area as some kind of a frame for future moves because, gosh, look how much time we spent just getting to know the level. So, anything you want to add to this, Ben?
No, just that, the while it's boring and frustrating with the sideways, know that it's building up energy for a major, major move.
Yes, that's for sure. All right, let's jump to the weekly because, even though we look at the 30-minute, the weekly sort of also the driving force, we really keeping track of what the weekly charts are doing. Well, for one thing, just to keep some sanity. And you guys know we looked at the 90-week cycle has been a big deal. And 90 by 135 came in at the high. After all this time, that high is still in place. This 56.72 basis the weekly, we'd like to go and visit it often, but we really haven't been able to tap through that. And this week, if you notice, we have an outside bar. Let's see how we follow through next week on this. My take is if either one of these side stakes gets taken out, it's highly likely we continue. Although there are times when we can continue to do some kind of expanding triangle where, each week we'll take out the high or low of the other just to get everybody on board, I guess. So, but look, the thing I was talking about on the daily chart, why this is important, we have all kinds of time frames to go off of, but one of the key lows we have to work with is the one from 2009. And if you look at that, and this is a great low, it's worked really well for us, all the way through. But what I wanted to show you is we're out 9 cycles of 90 over here. We're at 810 coming up to next week. All right. So this is kind of a big deal.
Yeah.
It's so 9 times 90, not that necessarily that holds a lot of power, but I think you ought to watch these key cycles when we get to them, because more often than not, something happens at these cycles, especially if we have price and time lined up. The next 50% level off of that 2009 low would be 57.40, quite a ways higher, but not that much higher. You know what I mean?
Not that much.
It's not.
It could be a day.
It could be, yeah. It could be it's a morning session, right? So
Right.
it can happen, but we want to keep an eye on that just to, we want to frame all of this because it's the framing that helps us get through all of this so successfully. And if you look at this chart, you can see how well we've done, at the 50% levels, how in 2015, in that entire boring time that we were held under, we got through it, and you can see how eventually it broke down. And it only took off once we got on top and settled on top of it, just like we talk about, getting on top and settling on top. Well, here's a good example. There's a good example. There's a good example, right? Here's another one. Here's another one. So here, I mean, here's another one. So now we're at the other 50% level. I mean, I think in the first run we got close enough. Well, it got close enough definitely because we stalled out for a few weeks. So now we really want to watch this because, for one thing, we have another account. The other thing is you can see how, I have 57.20 basis, the 30-minute chart, but I know we have some other levels on the daily, and none of them are coming off of 2009 basis the daily. They're all coming off of these other lows. So this level up here, 56.72 to 57.20, that 20, this little area compared to the entire, the size of the chart, it's not much, but this is sort of the buffer area we want to watch, especially now. Why? Because we have another timing cycle coming into play. All right.
I think that corroborates the cycles, the totally different cycles that I'm looking at that have said in this time frame, which is late August, early September. You got to watch it.
Yeah.
It's and we're in the zone.
And there are too many unrelated things pointing to sort of an inflection point. It doesn't mean, kind of like we talked about in the NVIDIA chart that we did the other day, it doesn't mean we have to take a trade at the inflection point, but at least we have an idea of what the potentials are in either direction. You know what I mean? And one of the benefits is once these start rolling, in either direction, by talking about the storylines, one or the other, we kind of know the potential, and then you can know how to place the bets, how to put the trades on. A lot of it's about that, not just be on one side or the other. But here, it's clearly a demarcation point. It's a 50%, so we have to talk about it in that sense. And something definitely stalled out because of this outside price action sort of points to that, right? Otherwise, we would have just moved higher with like no problem. Why stop right there?
Yeah.
All right. Oops, that's not the chart. Let's get back to, well, that's enough for the
E-mini. That's a good coverage on the E-mini.
Yeah, we got that bracket covered, right? Yeah, we got time. We talked about price.
So I mean, the big takeaways are it's violently sideways, but it's super important from a time standpoint. Exactly. The area that we're in. So it is not going to go sideways forever. It's not going to be boring for long. And pay attention next week.
And watch the price action closely, especially coming out of this, the key levels that we just talked about, 56.29, all this. All right, let's move on to bonds,
which are violently in a triangle.
But going in the direction we talked about.
Yeah. Yes.
Well, like you said, the triangle broke, right? There's a triangle line right there. And well, if you guys are watching this last few weeks, we talked about this 125 being resistance, and we called out this false break when it happened, and we got a lower high. I think last week we left it with, really we need to, 124, 125 is really the bracket we need to take out one way or the other. And lo and behold, we started to, we dropped a point roughly from where we were last week. So it looks like it's breaking to the downside. Does it make sense? Yes, we talked about this 116/72 last week. So if all the parts are working normally, that should hold for a bit. That's really it for bonds. I mean, we called the high, and now let's look for the other side.
The weekly was an inside bar, so exactly. It's more of the same. It's this calm before the storm.
Yeah, and to the downside, 121, 120, and 120.26. That's where the big support is. I could see it easily being, that stopping there and coming back for a bounce, but there's really not a whole lot of support above that. So 120.20, let's say, to 121, I would look for support. If it starts to take that out, then we're back into the grind over here. And but anyway, the bonds, guys, know what direction they're moving, but you knew that last week. Moving on to the weekly bonds. Well, let's take a closer look at almost inside, right? Well, we took out the low though.
Yeah, we did take out the low of the previous inside because it looks like it's about 3 weeks worth of inside, huh?
Oh yeah, from that. Yeah, exactly.
Yeah.
Yeah. So this is also looking a little negative, and it could be that we're, the weekly is just sort of consolidating, basis the weekly, the quarter square is 123. And if we get below that, I would say that little triangle is breaking to the downside and probably going to go find some support before anything else. If we hold that, we can expect it to, clear the squares and move higher. But for now, it looks like it's a breather, and you guys know the levels. Let's take a look at crude. Another exciting
Speaking of
market.
sideways,
Yeah. What to do?
imagine the action, Barry, when they break, because they're all going to break at the same time too. There's a good chance that it's going to be some sort of macro event, and they're all going to go.
Yeah, and my thing with these kind of breaks is, we hope we get a chance to get in at the right time. Sometimes
Yeah,
they happen in
yeah.
the middle of the night and we're dozing off and the market
Now
takes
this is
off.
this is when we're going to have to go to our tag system, right? Where I take 2 to 4, you take 1 to 3.
That's right. That's right. We used to do that. We take
Yeah,
turns watching at night. Yeah, when it gets close and timing is right, is it worth doing that? But for now, not really.
right.
So we're back, funny enough, at 53.50 is our level. We're at 53.56. So what can I say? We're it's going to be firm above. It's going to be a little bit weak below. If we go lower, we're probably going to make a new lower low. And that would give us like a sort of a little bit of a 3 drives to a low, and that might be what it takes.
Yeah, a little mini 3 drive.
Let's take a
Okay.
look at the weekly.
Look at the weekly. Still triangulating.
Triangulating, and it's really pushing this box now. So maybe it's time to, I don't know, maybe I didn't think we'd be in there for this long, honestly. I thought we'd be long gone
I know.
by the time we reach the end of the box. But let's extend it just for fun. And as you guys can see, we're just scraping at the bottom of that level. This is sort of the bracket. I don't know. I think, we could briefly go down and flush it. I mean, the fact that we've spent so much time down here, might as well just go flush these other lows out before we whip around. So I feel like that's what's in the cards for now. So let's see what happens. 73.50 is really the level.
When's that 240 timing? Is that late November, early December?
Yeah, that's in November, I think. Let me see. November 22nd.
It's
So
interesting.
that's a possibility.
hmm
And we can also take a look at it from the highs here.
The last timing worked really well.
Yeah, last time it worked beautifully. So another reason for, not getting excited to sell this thing is where, we have support 60 degrees down. It's like right
Yeah,
there.
right there.
And that level is 70 and a quarter. And then we had this little buffer level we drew out, I don't know, 2-3 years ago. And I leave these things on the chart so we can extend this out. You can see that's, sort of drop dead support. That's around 63, 64 or 64, 65. Yeah, for now, just watching to see how we do along the lows here. It is a big triangle. There's number, we've been down for so long. We have probably every triangle known to man is in here. Uh, but what's interesting is going off the lower high, we're
Yeah,
exactly 60,
right.
and then we had exactly 50% retracement, and now we're coiling in here. So this is the part. I mean, this is why we can't go through each of these squares every time we look at crude, but so I just make the comments. But if you guys can see, like we've been in a quarter of the square this entire time, since most of the year, basically, for a year in this quarter of the square. So that's why, when Ben talks about, imminent breakout, yeah, it's coming and it'll go on for weeks. So we'll have to just wait and see. In the meantime, just keep your powder dry when it comes to,
And keep your eyes open. Watch it.
yeah, powder dry, eyes wide open.
Right.
For sure. All right, let's move on to gold. Almost starting to look like the S&P here.
It's just sideways, man.
Sideways, we're up 180. It's a decent level. We talked about, when it got there that, and I also drew this little triangle. If you saw that, we're starting to break it today. So it's possible we get some weakness in gold going into next week. Looks like, the level held, which is kind of positive. Anything else? I know you watch gold very closely. You want to add anything to that?
I just have a monthly half squares on the gold is 25.75. So it's just banging up against that for me on a monthly right now.
Okay.
Right at the highs.
So yeah, not much. I don't know what else to add to that. I mean, from the low back in October, we had 315 degrees to the high, which is a key level to square out. So I think it did bite, and we do have a square up here.
Mm-hmm.
I don't know if you guys can see that. So there's the
Yeah, there it is.
315 right at the
Yep.
high.
Mm-hmm.
So yeah, I think being that we didn't really settle above and break to the upside, we're kind of starting to break below 180. Looks like gold's ready to take a little bit of a breather. Let's take a look at the weekly. There's the weekly. We're up well above the 270, and it wouldn't be unusual for it to pull back to, let's say, 450, 2450 or 2460, do a little bit of a back and filling before anything else happens. I feel like a turn down is probably in order,
Mm-hmm.
because we've had a good run, and I'm not running squares from all the lows. So, there are moves in here. There are degrees that we run up. It looks like we're in pretty good timing for a turn down, especially looking at, I mean, it wouldn't be a huge turn down, but it'll be some kind of a pullback in gold temporarily. And if we can hold above the 270 level, 24.15, 16, I would say gold's in really good shape. Hey, Ben, one other thing I wanted to show you on gold.
Okay.
I don't know. Well, some people, it might be easy for you to see, some people to see it, but these are all squares of 90. So 90, here's 45. And if you look at this line, if you move it over a couple, it lines up with 90 weeks.
Drag it over there so people
Yeah.
can see it. I think that's important to visualize.
Because sometimes we forget, how these things sneak up, these cycles sneak up.
But 90 by 45 is a goodie.
Yeah, it's a goodie that shouldn't be ignored,
Boom.
especially if you're trading the market,
Mm-hmm. There it is. That is price and time, my friend, on a weekly basis, which are more significant for obvious reasons, bigger cycle. That doesn't mean gold's going to collapse, but it certainly means you got to watch and see, okay, what is the new cycle going to bring?
Well, it's definitely, I mean, it might not collapse, but it's definitely a price and time meeting up. And
Yep.
it's important to notice that. And this is why we're sort of putting the brakes on it the last couple of weeks, saying, hey,
Yeah. Yeah.
we did do the 180. I mean, you saw the same thing on the daily.
Sure.
That's what we
Sure.
got, the 180. And so weekly wise, 45 weeks by 90 is a sort of a big deal. So you ought to know sort of the reasoning behind all of this. And so this is why, until we sort of settle above that, I just don't see gold, doing a whole lot. And the correction here at this time, at this level, is actually very healthy.
Very healthy.
And this is 25.54 is sort of what I get, just roughly putting the line on there. It's close enough. And anyway, that's what I want to show you.
Hey, and you know one thing, Barry, we can relate to other things that we use so people understand. That right there is a 2x1 angle.
Yes,
2
exactly.
units of price for every 1 unit of time. Because Barry, on his charts and my charts, you'll see the trend lines. Sometimes they're 1x1, sometimes they're 2x1, 3x1. That's a 2x1. Square out.
And there's a line. And if you pull it out here, there it is.
Right. So,
and that's a very steep line. No matter
2x1 is really steep.
To say gold got up there in a hurry. And that move came after all the sideways. And the move's not even done yet. So there's a lot to be said for those, year-long sideways.
Everybody back up your recording and listen to that 10 seconds again. That big move came after a year-long sideways.
Yep.
2-year sideways, actually. Look at it.
Yeah. But yeah, really.
And that's what we've been saying. These boring sideways, big moves come out of them. So you have to do the work while you're in the channel, and then you're ready when it happens.
Exactly. That's what you got to do.
Yep.
All right, let's move on to copper. It was redeeming itself over time.
But if you look again, it's been sideways for the last week and a half. Price has gone nowhere.
It has, but it recovered. It's basically making higher highs and higher lows. So it's doing okay. The only thing is, we have all kinds of resistance at 430. So that's the area to sort of break out of. So up until then, it might consolidate up in here above 406, and that would be healthy also. So basically, it's long as it's above 406, it's on a positive on the positive side of the square, and it could move higher. But of course, it needs to take out this 430 to really get things moving.
And a pullback to sit on top of that square would be fine too.
Yes, exactly. So the reason we need to sit on top and that 430 level is really to break out of this, which, that would basically clear us out of the 144 coming off the low in 2020. This was a big cycle. I remember there was a 216-week cycle.
Yep.
So I would expect copper to be probably messing around these levels for a little bit longer. That said, if we can get above 430, then we can expect another run up. For now,
Barry, look at what it did. Show them what it did. Pointed out what it did before the spike into the high. Look at that triangle.
Yes,
Like
this
a
one,
year-long triangle.
Yeah, big triangle.
2-year triangle. Yeah.
Mm-hmm. And this was really kind of nice. We broke out. We had a nice, perfect textbook check back, and then ballistic. So that was perfect. And we had it all drawn out, so that worked out.
And that's the energy release we talk about when these things break.
And it's well worth waiting instead of trying to play the compression.
Then you get the yips when it really goes.
Yep. Right. All right. Dollar came down to our level. We talked about 100
and a half.
100 and a half. And we got there, stomped on it a few days, tested the hell out of it. So it looks good. But I don't think we're out of the woods up until we take out this 102.75 level.
Right.
So let's see how the next pullback works out. This feels fairly solid. Not just solid, but we also took out this low. So we kind of did the false break. We were having kind of a fast move out of there. It looks good. I think, are we back to the, dollar being bullish yet? Not quite up until we get through 102.75. But let's see what the next counter trend looks like. If it looks good, that first pullback, we can get in on the third leg. Right, Ben?
Yep. Absolutely.
It's a good plan for the dollar. Well,
look at that support right there.
Yeah. So this is, I had this square coming off of here because we were looking at this low a while back, but just moving the square down to the low back in 21 or the 2020 low. Here's another, we talk about these 90-week cycles aren't anything new. We've been looking at these for a long time. And here was a 90-week cycle in the dollar that came in.
Beautiful.
Right. That was amazing. And this is why, you guys, when we see 90-week cycles show up in these markets,
it's a big deal.
It's a big deal, and we give it plenty of time. Let it work itself out. Like in the case of the dollar, look at this. We get almost a 50% correction, which is no small beans, right? It's a big move. We broke the big triangle to the downside. It felt like it was a false break. It might be. But the more important thing is we held the 90 coming off the low in 2020. So I think that's the thing to really notice here, 2021 January. So that low is around 100 and a half. We held it for 2 weeks of lows. So it looks good. If the next daily pullback kind of holds it together, I think we can say there's a decent low in place, and the false break, as it were, might be finished. Especially because, why? Because we took out this low, back that we made in December of 2023, and we didn't follow through. We just really stopped exactly where a false break should stop. So those are the things I noticed, and looks good. We came to the right level, so I think we can call it out. And like I said, on the next daily pullback, we can get back into business.
Yep.
Yeah.
Looks good.
All right, moving on to the euro. Pretty much the same story. We ran up, and the false break was really here, off the high in 2023, December high. Didn't quite get up into the July high. Again, the downside's really not running hard till we can get below this 109.513 level, 510 level. That's the level we're watching. and it's possible that we consolidate up here for a little bit longer. And if that's the case, we have to allow it to do that. One other thing to notice is that high just came up exactly 188 bars from high to high. It's something to be noticed.
Mm-hmm.
Definitely not to be ignored. And if we go off the low in October, we just tried to get above this one, remember this one came out at 72 degrees and we backed off, corrected 3/4 of a square. And you can see, and remember 108, I think this is how we got that, back in the day, how this became like a big balance point for the euro. And eventually we broke to the upside, came back to test it, and we ran up the rest of the half square.
Mm-hmm.
So in this move, we really couldn't get above and hold above like we like the square to do. It didn't, it broke down. So I'm thinking that might be over, which kind of cements the idea around the dollar.
Sure.
But, let's watch it for now, see how this counter trend goes, because if it gets up in here and fails, that could mean, we've done it on both sides.
And not that sentiment you could quantify it, but man, people got bearish on the dollar really quickly.
Yeah, exactly when it got to the low.
Yeah, that's true.
Right? I mean,
That's true.
I remember it was getting bearish right about in here, right? Boom, 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 and there.
Yeah.
So, all right. So that's the euro. That's pretty much, we got to go to the weekly euro. So the weekly euro, we didn't quite get to the 90. This is what that was our sort of the main level.
Mm-hmm.
We did break the triangle to the upside, and I'm telling you, it just feels like it was a big time false break. Too early to tell, but we're going to treat it that way. 110, 109.50 is the sort of the key upper band.
That's a good level.
It's a good level, and the thing is, we couldn't really hold above it, right? We ran up to that 72 on the daily basis, coming off of this low, and we turned around. So we're really, the story's back to 108. Once we come down here, whatever the next counter trend is, we'll have to see how that works out. It just feels more like a sort of a false break up here against this high back in 23 than a fresh start, especially since we're just right under the 90-degree mark. Makes sense, right? So
for it to be a fresh new start, it would have to get on top of that 90.
Yeah. So we're not quite there yet, especially with that 72 that we saw on the daily chart. I think that's all I got. Let's take a look at our natural gas chart just for fun. Well, it's not, it's identical to last week, more or less, because we're in the
sideways,
same range. We're holding above this, 187 level. But boy, it just feels like a good bottom. We're starting to make some higher lows. How do I see that? There's low, higher low, higher low, higher low. Because of the scaling, you guys might be hard for you guys to see, but it's in there, right? So so keep an eye on that. That's all I have for. Let's look at the Hang Seng. And pretty much, like we talked about, it held above the 50%, started to, I said it was sloppy, but it's moving higher. Sure enough, sloppy and moving higher.
Yeah.
This 18,054 is really the level. Once we get on top of that, I think momentum's going to pick up and we can easily go back and test 19,450, 19,450. In the meantime, we might back up and fill again one more time. So, but it's doing fairly good above the 50%. I think, that test passed. So
yeah. Yep.
Yeah. So that's all I got. Let me
excellent.
Put it back to you. Thanks.
See how much is going on even when it's boring.
Man, there's a lot going on, because the thing is, you have to talk about these things and cover these things before everything starts to move, because then it's too late.
Then you're asking what happened instead of, okay, I understand what's happening.
Yeah, exactly. To move with it, we have to kind of have a little bit of a plan. So I think covering these and giving you guys all the levels and timing windows, I think we're ready. We're always about 2 weeks ahead of where we should be.
Yeah,
in terms of mapping it out. So anyway, all right, let me put it back to you, Ben.
Okay.
Carry on. Well, you kind of did wall to wall here, 50% full square.
Yep. Yeah. The interesting thing um this week for this one was the if you take the April low
Hmm.
to the high, 90. Missed it by one day, it would have been perfect 90 days.
Pretty good. Yeah.
And we probably had a holiday. I'm sure we had a holiday in there somewhere. So anyway, so you got 90 low to high from this
Hmm.
April low, which April low is a good low.
Yeah. Yeah.
Um, and I noticed that this week and I said, okay, we gotta pay attention to that. Key things are we found support on this full square. The
Hmm.
low came down, tapped the full square, and now we're sort of looks like we're going to do an inside bar today. So the key levels are the half square here,
Hmm.
which is around 20,000, and then the full square here around 19,170. Whichever side breaks will tell you if we get above this half square, we're going to go up and we're going to test the highs. If
Hmm.
we get stuck below here, we're going to go down and test the lows.
Right.
And that's kind of what we're looking at. There's
Hmm.
not been other than testing that low, it's been, fairly choppy as you can see.
Yep.
Let's
It's
jump
also in
over.
a tight bracket.
hmm Let's check the weekly.
Hmm.
Now, the interesting thing with the weekly, we're going to have a bar that's a down bar now, right? So we had this high come in on timing, had the low. We rallied up 2 weeks. That's a normal counter trend, right? Two bars is in your average. What do we say? Usually
It's
it's one,
actually, yeah, and it looks weak because two bars up and we're
and
already
then we're
down,
already down. Yeah.
reverse.
So next week is going to be big. Do we put in another? So we got to watch the low and the high of next week because if we can take out the high, that means okay, it was just a one bar counter trend. But if
Hmm.
we take out the low, it means we're starting another leg down. It's a
Right.
good chance we are.
Yep.
So pay attention. As I said, it's boringly sideways, but there's a lot going on, and you got to read the tea leaves to be ready. Let's take a quick look at the monthly because the monthly prints today.
Hmm.
So we're straddling this full square, so we don't have a lot of information yet about what it wants to do. And that's a 108 from the low. What we want to see is do we get a full bar above or do we get a full bar below? We're probably not going to get a full bar below because the next bar is going to open somewhere in here.
But we might
Uh,
get a close below last month's close.
we might get a close below last month. So this is we definitely have a down bar for the month, so that's
Mhm.
that's interesting to know. So we want to watch this high. Does the high get taken out, and we have just a one bar counter trend, or does the low get taken out first, and we actually are starting a downtrend? There's another one I wanted to show you because it's I call it I put in my notes I have this is ominous looking. Here's your calendar day, and so we got the high, came in on the half square. The red horizontals are half squares, right? So
Mhm.
there's your half square high. Came all the way down to the full square, and now we're coming up and we're failing at this full square. Now we're failing both from a full square standpoint as well as structurally. If we stay stuck below this, this is when fat pitch territory comes into play.
Mhm.
This could be a fast move down. So we really want to watch this, call it 19,750, 19,760 area.
Mhm.
We got to get above that if the Bulls want to have any hope of pushing more. Because the longer we stay below it, the more chance we're just going to give it up. And so I've been watching this one and this is running like a 72, which is a derivative of the 144. And so this high is two full 144 squares up. The other thing I was looking at, Barry, is if we did, let's say we did 1, 2, 3, 4.5 to the high. So if we do
Mhm.
2.25 back,
Mhm.
1, 2 takes us down to 15,000.
Right. Nice level.
And there's support here. You can see all this over here would be support.
Mhm.
So this area which is why we say it's a fat pitch. If we get the evidence keep stacking up, this is the target. Anything else you want to add on this? Daily, weekly,
Yeah,
monthly?
I think if this week's low goes, we go.
Yeah.
Gotta call
Yeah.
it like it is. So
This week's low is key. We want to watch next week and see if that low gets taken out. And that, just so everybody knows, this week's low is 19,200, 218, 19,218. So that's our key for next week on the NQs. All right, let's jump over to Bitcoin. Still in our channel,
yep.
still making lower highs. The ominous thing here. I mean, I'm still bullish because when you look at the bigger picture, it does look bullish. But look, this is the kind of curl you see when you're starting to roll. you know, you get those lower highs and then it just starts boom. I mean, you could fall right out of bed.
hmm
So, what do we want to watch here? Key level is going to be this half square, which is around 56,250. We get below that, then you got to watch here. You got to watch the full square where there's support, right? There's good support here. But I do think it's kind of stuck in this channel. Let me show you the monthly and you can see why I'm not so bearish. I mean, look where all this is happening. Unless this was a false break high, we're just building a ledge here on top of this for the next move. We'll have to, I mean, look at that monthly bar. Huge
Yeah.
range and close right near where
Right.
the
Yeah,
open.
yeah.
What do they call that? A doji indecision?
Yeah, I guess I'm not sure
Yeah.
about that one.
But I mean, the reality is it's all this. It reminds me of gold. Remember we were talking about how gold was in that consolidation, but it was consolidating on top of the highs from 4 or 5 years ago, 6 years ago.
Mhm.
And then we got the breakout. It's a similar type of pattern, but we'll see. I mean, it's not a guarantee it's going to play out that way, but we'll see. Anything you want to add on Bitcoin?
No, other than I think, I see the heaviness of it. I just feel like it's, at least the near term weight is to the downside. Even though we came down, the square wise, we came down 2 squares, it seems reasonable.
Mhm.
But the move up, it's just not that robust, it just looks a little weak. So I feel like the dead weight is to the downside for now.
Yeah, I guess thinking like a criminal, maybe a flush, take out the lows and then turn it would be the
Oh
the way
God,
to
yeah, that'll be.
distribute maximum pain.
Yep, yep.
All right, let's switch over to the commodities now. There's good news and bad news. What do you want first? Good news or the bad
Let's
news?
have the bad news.
All right. The bad news is most of them are going sideways. I'm just going to read from my notes. Cotton, sideways. Gold, sideways. Silver, sideways. Copper, choppy, sideways. Crude oil, sideways. Nat gas, sideways. That's it for the sideways. The other ones, here's the things the good news.
hmm
Wheat, corn, soybeans have made moves up off their lows. We have a higher low on wheat. We've done an ABCD up on corn and soybeans on a 4 hour. They completed those things, so we're checking now to see if we get a higher low on a pullback. Um, Coffee completed an ABCD up with a false break. We got to watch that one because that could turn. There's some cycles going on there. I'm going to dive deeper into that one. So the good news is that there's a lot of sort of undercurrents going on with these sideways moves or the bottoming processes. We just got to pay attention. I'm going to pay attention to these things. We're going to bring it to your attention when they're ready to go, but they're still sideways. So there's just not a lot to do or not a lot to talk about. The one I do want to talk about with you guys because I mentioned it last week and it had a pretty good week is sugar. So let's review why sugar looks decent here. It did on a lower time frame last week. It did 54 by 108 into the low. That's a decent square. And I looked on the daily and look at where our square came in, right?
hmm
On the low, on a full square. And then we get this move coming out, which is fantastic, right? Took out previous highs, straight up move. Now what I want to see, and it looks like we completed something up here, like on the 4 hour, we did 36 by 8, 54 by 108. So we did a square into this high on a 4 hour basis. So we're going to get I think we're going to get some kind of pullback or consolidation. Want to see it if we come back, if we can hold this one by one, that would be great. but give us a higher low that we can play off of.
Mhm.
And that's the setup right now in sugar. Let's jump to the weekly.
Hey, Ben, really quick, in
Mhm.
between the sugar charts,
Yeah.
wheat, you said, it's starting to make higher lows.
Yep.
It did square out from the high in 2022, March high, coming down to this low in August. So just so you know, and that could be why, we might be done with that cycle. So,
And there's an interesting thing too, Barry, is what a lot of times I won't dive deep into the charts every day. I'll just watch, my quote page,
mhm.
and you see, certain groups red, 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 red. And that's the way the grains have been for the last 2, 3 weeks. Almost
Mhm.
every day they're red. And then all of a sudden this week, all three are green. All three
Mhm.
are green.
Mhm.
All three are green another day. And I'm like, okay, now let me go jump into the charts and see what's going on. And that's when I said, look, wheat's starting to make higher lows. Corn and soybeans have actually, done ABCDs up. So they're they're
Mhm.
they're starting to show signs of a bottom.
Yeah.
And you pointing out that wheat had a square, also great, right? Because you want to find, that's the next thing you do is you look and you say, okay, do I have a nice square at the low where I could say, all right, let's anchor that low and see if we can get higher lows and higher highs off of that.
Right.
And so this is where we are, I think, with sugar. I've gotten some squares. We've seen some strength now. And now I go look at the higher time frame and I see this. I see, okay, the weekly came in on with the low on a full square. The move here is basically one, two, three, almost four, roughly call it four squares. Look what we've come down. One, two squares.
Mhm.
So it's basically 50% of the up move corrected. And now we're starting to get, look at that bar, that weekly bar up that we got this week.
Right.
And boom, that you haven't seen one of those in a while in this.
Mhm.
And it's hard to see here, but I hope you can see it. Look at what they did at the low, Barry.
Yep.
Little bit of a false break, huh?
Mhm.
And look at last week's bar, right? We made a new low, and yet we
Reverse
closed we
hard.
closed on the high for the week. And then this week we opened above last week's low.
Right. Gapped and left.
Yep. So I think the low is good there. Now, as we were looking at on the daily, now we want to see what's this first pullback going to look like. Because remember, that's the fat pitch, sort of dance, right? You
Mhm.
get your push up, you get a pullback to a higher low, and then you catch the fat pitch on the third move.
Right.
And so sugar is setting up for that. Let's jump to the monthly and look where the low came in here.
Yeah. Perfect. Looks good.
Here you can see a multi-month sort of false break, right? We had this low, then we had this low that did a false break, and then here was the last one, finally the flush.
Yeah.
But we found support on the half square and reversed pretty hard. So
Mhm.
to me, it's early on sugar, but I think it's setting up to where, like Barry said, we're a couple weeks early. Maybe next week we get the pullback, and then we get the reversal the following week, and then we're in the trade.
Mhm.
So sugar is one that popped out in a sea of chop and sideways on the commodity side. Anything else you want to add on sugar?
No, we're good. We're good.
Okay. So that's it for the commodities. I think, Barry, the topic that you and I have been discussing because of the cycles and the phase that we're in is, and I don't think it's talked about enough. Everybody gives it lip service and says, hey, you got to do something about it. You have to do this. This is something that's required if you want to be a successful trader, and that's manage your risk. But very few people I've seen talk about how do you manage risk?
Mhm.
Like practically, what do you do to manage the risk, to keep the risk at for keep you from blowing up so you don't, lose your seat at the table, so to speak. So let me put it over to you, and let's talk a little bit about the ways in which we manage risk when we're trading.
Well, it's a big topic, Ben. Managing risk.
Give me your best 5 minutes, Barry.
They have 4-day seminars on the topic.
Right.
But let's go through some of the basics. What can we talk about? Well, everything that we look at, we have a way to manage risk. When we talk about levels, We talk about levels because we use the level to manage the risk because it's a known, the level is a known and the future is always the unknown. So if we can manage yourself around the known, then I think the rest will sort of, like they say, it will take care of itself. Well, for the S&P, let me switch to the 30-minute. Maybe we can find more examples. Can you see this? Okay. Yeah.
Yeah, I see
Okay.
the 30.
Now for managing risk, I'm not picking the best week here to show you examples.
Right.
It would be much nicer to, just take an average week where we have a couple of days trending, a couple of days sideways and whatnot. But this, I'm just going to use, what we had the last couple of weeks, just to save some time. So the idea is you want to look at patterns and setups that force you to limit your risk. So what does that mean? You want to know as early as possible when you're wrong.
Mm-hmm.
And you want to be able to bet as little as possible in order to find out if you're going to be correct or not. Does that make sense, Ben? So the
Risk
idea,
as little as possible to figure out whether you're correct.
exactly, little as possible. So the logic would be, if you're going to do that, you need at least one known. You can't go with completely unknown. What are you going to do? Flip coins?
Right.
And
Right. Right.
so, and some people might use indicators, some people might use, trend lines, whatever. The problem with the indicators is because most of them are momentum based. It's difficult to manage risk with an indicator unless you're really combining that with some kind of structure, meaning having some kind of a pattern, right? A, B, C, D, so forth and so on. So given what we have, which is, let's just take the last 2 weeks and see how we could trade this. Now, not the ideal trading conditions, know what I mean?
Mm-hmm. No,
but
not.
But I want to use, without bringing an entire system, just find a simple, let's say, a couple of patterns to somehow frame the risk reward in trading.
Mm-hmm.
All right. In order to do that, let's pick something that happens on the 30-minute all the time, and that would be well, let's take false breaks. I know we talked about inside bars and triangles, and there are plenty of those happening here, but false breaks would be good here because we had a decent share of it this last couple of weeks, right?
Yeah, there's a nice one on the quarter square there.
So we came up on the 20th. I mean, here's a false break right there. It might end up becoming a great lesson on false breaks.
Right.
So we had a false break here, and my assumption here is we have the 30-minute, and you can use the 30-minute reversal for to trip into the trade, or you can use a lower time frame like a 5-minute to trip into the trade, following the false break. So those are the two rules. So I don't have to keep repeating them. And if we do that, we look at the false break, and you figure you're going to get tripped into the trade at least within 5 points of the high, and it could be low, but I think that's a good, more than fair entry price, and especially if you're using a lower time frame. What do you think, Ben? That's fair enough, right? Okay.
Yeah.
So if you do that, here's a false break. There's one, and I'll mark up the false break. Then we'll go through the trades and the risk. And if you want a second one, here's a second false break right there. Ran up to the 56.29, came around again. Not much of a false break here. We could have had, there's one there, and we definitely have one against the high up here. And here's a false break we all called out. And the one up here we talked about in real time. And some of these we talked about in on X. Some of them I don't know if we did or not, but I'm just marking these off just so we have something to go off of.
Boy, it shows you the choppy nature of that channel.
Yeah, I mean the whole thing. It's real. I mean, it's been a great week for counter trend traders, but not necessarily for trend traders, because that's why when you want to be really careful with these things, whatever systems that you're using. Okay, so let's take a look at them. Okay, let's take this as a counter trend. if we take it within, rules where we take it within 5 points of the low, and using a lower time frame, or the 30-minute. What you want to do is, and why is this a good system? First of all, we talked about systems, I don't know, a while back, and you want to test your system back in history, and to see if you have at least 3 to 1 risk reward ratio. And if it's 3 to 1, 5 to 1, well, that's even better.
Mm-hmm.
And if we take those rules into place, and we use a 5-point entry, let's say the trade is 5 points. So here's a 5-point risk here. And then we roll down into the lows. Now the exit's another story. So we'll have to talk about that on another show about how to exit. Otherwise, this would end up becoming an entire show on how to trade a system. Let's just pretend you moved it to at least your break-even point once you covered your risk, which would be, let's say the market moves away 5 points from your entry, and you can move it to break even. If it goes 10 points, you can cover it. If you just take it like that and you move your stops down, you can see, if you mark these on your charts, you'll see, by the time you got to the low, here's 56.12, and the high was 56.43. Here's 56.37. So we got 56.37 coming down into 56.14, right? So you can see for the 5 points that you risk, you made more than twice.
Mm-hmm.
Right, Ben? That makes sense?
Yep.
Okay. And then you wait for the next false break. Well, here's the next false break down here. And if you did the same thing, market ran up, you've had at least 2 to 1 and 3 to 1. And the bounce back, you could have traded this because you're still coming off the same move. You're trading in the direction of the false break up until we got into this high. Clean false break, because we didn't really close above that. It turned right back around. If you got into that trade, came back down, pulled back and retested the 56.29 and went right down to our support level of 55.85. That's a huge move compared to the risk that you took entering that. What do you think about that, Ben? That those are the kind of trades that make up for the week, when you catch them, and so going on, it was a very choppy week. I'm just looking for the false breaks that were obvious and that we might have talked about on next. So here's another one, 56.66, turned around, and that went right back to the 56.29. Another false break here against that low, and that moved up 2 to 1, 3 to 1 at least. False break in here. Again, that one worked out really well if you just stayed with the trend and moved your stops down, doubling your risk every time, there's all kinds of formulas to how to move your stops up or down as you have profits and the market starting to move in your direction. And you have to kind of fine tune that to whatever the market you're trading and the time that you're trading, so you have a solid sort of a package, right? And so there's to the downside. And then I remember this day, we went down, a couple of inside bars, and all the little things we talked about were there. It was false break. Thing is, we went to a new low, inside bar, took out the highs. Well, that's in place. This might have been a little bit more than 5 points, but if you get on board in here, anywhere in here, the move overnight was unbelievable.
Massive, yeah.
Massive. So again, we're talking about, even if you got in here, it's a tiny risk versus the reward. So you want to make sure you try to get in on the places where the risk reward is high. And here's the next.
And in this case, your trigger is the false break.
Yeah, and we're always watching for false breaks anyway, but it has to fit within the overall template, the template that you have for your trading strategy. So here's another false break, and we sat around for a couple of bars, turned down again, more than 2 to 1, 3 to 1, and then we had the one today where we sold off of that fuse line, came through the 56.29 and the false break low, turned around, inside bar, ran up. So there's your next move. Again, they might not all be within 5 points of the low, but you have to figure that out on your lower time frames and how you enter them. So the key here is, of course, the counted trend strategy would work out great in a week like this, unless you're trend trading on a 4 minute or 5 minute. You know what I mean? But the point here is, no matter what the strategy is, you want to look for a place where you can reliably get at least a 3-to-1 win to loss ratio. That's the key. And the way you find that is you want to go back in time and test the strategy to see if you're talking about false breaks, great, they work all the time, but then you need something to bracket that with. In this case, we had the squares, we had the midpoint, 56.29 was the key. And we've been talking about this 56.75 and 55.85 for 10 days, really. We had these levels before price got there. And if you know that, then false breaks can happen inside of those levels or a little bit outside, like what happened here. And there's a high probability, they're going to continue to move in the other direction. And you can quickly, not just get the initial stop into place, which manages your risk, but then move it up into break even as soon as the market starts to move. So the idea is really that risk management is always trying to see, whatever the system you're using, in the past, have you been able to reliably get, 3-to-1 at a minimum of win-loss ratio? If you can get that, then you're okay. So why do we just to use that to pivot over to the fuse lines that we use? We don't cover those on the weekly podcast, but if you follow us on X, it's all there. The thing with fuse lines is, over years, what we found out was taking those patterns off of fuse lines. Let's say this was a fuse line. What happens is, over time, the win-loss ratio is huge. It's definitely on the average better than 3-to-1, but usually 5-to-1. And on a good day, it could be 10-to-1, when the market really runs. So it really depends on your entry, your risk, the method that you use to trip into the trade. But the common theme we're talking about is coming up with a way that you can always limit risk. You can always limit risk. You know exactly how much you're risking. So with the fuse lines, all it is, in the morning we post a level. So if price gets above it, or it's strong, if it gets below, it's weak. And you can trip yourself into a trade using indicators or some kind of a pattern trend line break. But however you get in, you always know where the price level is, and you can sort of adjust your risk around that level, just like we adjusted the risk around the false break level, on these. So the key is to have some kind of a anchor point, so you can always have a reliable and the smallest stop that you can afford to have, with the market and the time frame that you're playing with.
And in the examples you gave, the fuse line is your sort of immovable object, right? That's what it's what you're selling or buying against. And if it gets to either side of that you're wrong, right? Depending on which side of the trade.
Yeah, then you need to tip out of it.
Then you use that as a risk limiter.
Mm.
On the other hand, for the false break, you have the false break bar. The lower high of that is your limiter in terms of how far the market can go against you.
Yes, and the thing is, when you have 3-to-1, at least a 3-to-1, what happens is, you can get stopped out here and there. I mean, a lot of these trades, at least if you're wrong, you're going to be at break even. To get the full stop, you got to be wrong right away, and it's rare that you get a false break and you're wrong right away. Especially if you bracket that in if you can't just look at everywhere and be, okay, this is a false break, that's a false break. They're not everywhere. They're actually against the extremes of the market that you're following. First of all, you have to have a high. Did that come in correctly? So if you guys watch our shows, we show these things out all the time. When markets square out, when we get different highs along the way. So that's the thing. You would need to really study the past, so you know what that behavior looks like, and that risk reward. That's the only thing that you can rely on to give you the confidence to put on the next trade. And so my earlier point was, when the system, the complete stops getting taken out is pretty rare, because at least false breaks will move in the other direction enough for you to at least move your stop up to break even, and then you basically have a free trade, no risk. That's remember, Ben, we used to talk about that a lot. That the best feeling in trading is that when you have a
The free
trade
trade, yeah.
with unlimited potential, theoretically, with no risk. So
Hmm.
that's when you can get to break even. And so you want to look at your system, whatever you're using, go, hey, how fast do I make it come into break evens, and how quickly do I get blown out completely for the entire stop? And then you want to look for ways to minimize that and maximize the other side. Like I said, with a minimum of 3 to 1, and and these the square levels that we use, and
I
the
mean,
patterns that we use.
the squares are another great thing to sell against because you have that definition right there of where, the probabilities shift. And that's all we're trying to do is be able to calculate where the probabilities shift.
Yeah, and I mean, here's a great, like a two for twofer. Here we have a square level, and we had the false break.
Hmm.
And you can see that was good because that carried all the way across. Basically the entire range that we did for 2 weeks. We did it in one shot after we had that really great setup. You
Or
see
the
what I mean?
setup, yeah, that's a perfect one. Or go to the setup on the 16th, right? We went above the square, pulled back to the square, and then you buy that reversal, and there you go. There you got your stop against
Oh, right here. Yeah.
yeah, right
I mean,
there.
that's where our inside bar story thing comes in.
Yep.
That we had that. But yeah, that's a very good one because not only did it pull back to here, but that was a quarter of a square correction, which is sort of a normal correction. And
Mm-hmm.
when once one of these happen, taking out the high should take us to the full half square,
Half
which is our
square.
next point, right?
Hmm.
You can see that one gave us a half square. That one gave us a half square. This one gave us a half square. So you can see, you don't have to trade all the time, but if you just wait for the right setups, they normally work out, and you can live to trade more often or longer if you can manage those risk points, because you don't
Yep.
have to bet a lot to find out if you're correct or not.
Excellent. I think, Barry, hopefully you guys watching this give us feedback if these things are helpful, and we'll try and do more of them. It was a good show, Barry. Great review. The key thing, ladies and gentlemen, the markets look boring because they're sideways or they're stuck in ranges, but we are in a critical time period. Next week, especially, with Barry showing you the 90 weeks on many different markets, the big cycles that I've posted on X coming, late August, early September. That's where we are. There is going to be some major movements coming out of this area, and we just need to be ready because the markets don't move. What is it? What is it? Like 80% of the time they don't move. It's 20% of the time where you make most of your money. Isn't that there's some statistic like that?
70-30, I think what they say.
Yeah.
Uh-huh.
Yeah. So it's something like that. And we're going to get into one of those 30 times here soon. So you want to be ready, have your chart set up, know your levels, and just rest up over the long weekend and be ready because this next 5 to 10 trading days is going to be pivotal for the rest of the year.
Yeah, very good. Good job, Ben. Thank you. We'll see you guys next week.
Yeah, everybody enjoy the holiday and we'll see you next week.
All right. Thanks, Ben.
Take care.